Hello there, global citizens and financial enthusiasts. Imagine standing on a precipice overlooking a vast terrain of economic history. As we navigate through turbulent times, understanding the ebb and flow of global economies is essential. Our journey today guides us through the astute vision of Jim Rogers, a well-seasoned investor and financial commentator. We aim to inform you about two potent assets that could be the guardian angels of your investment portfolio during potential economic downturns. So please fasten your seatbelts as we embark on this financial odyssey. If there's one truth in the world of economics, it's that nothing is static. Economies rise and fall, currencies ebb and flow, and the financial topography is in constant flux. The history of global economic power is much like a revolving door, with nations taking turns at the helm. The Spanish, Dutch, and British empires all enjoyed their time in the sun, only to make way for America, which currently sits atop the global economic ladder. However, as history has shown, America's position too is temporary. It's worth noting that today's America is also the largest debtor nation in history, with troops stationed in more than 100 countries. It's a situation some experts view as overextension, financially, economically, and militarily. A precariously thin rope to walk on. Understanding this cyclical nature of economic dominance is vital in shaping our financial decisions.
Debt is so much higher now. America's the largest debtor nation in the history of the world. Look at Japan. The debt is staggering, goes up every day. So we have huge debts in the world. We've never had anything quite like this in history.
Suppose there's a secret sauce to understanding financial markets and steering through its choppy waters. In that case, it lies in the annals of history. History is not just a record of past events. It's a treasure trove of wisdom, a wellspring of lessons that can guide our future. Jim Rogers reiterates this wisdom time and again, emphasizing the need to learn from history's triumphs and failures. Rogers tells a cautionary tale of a recent president who ignored the lessons of history, believing he was immune to its teachings. This president's dismissive attitude toward history led to a series of unfavorable outcomes, an important lesson in the dangers of overlooking the past. For all of us navigating the world of finance, this narrative serves as a potent reminder. To understand where we're heading, we must first know where we've been.
So no, the world has always been changing. And what one needs to do is first be aware of it, but then more importantly, figure out how it's going to change in the future so that you can adapt.
But before we unveil Jim Rogers' recommended financial safeguards against economic downturns, here's a little nudge for you. If you find this video enlightening and want to stay updated with more invaluable financial insights, please do us a favor. Click that like button, subscribe to our channel, and hit the notification bell. Your engagement helps us create more content that helps you confidently navigate the financial seas. 2 time-tested financial shields. Armed with insights from history and an understanding of the cyclical nature of economies, it's time to introduce Jim Rogers' recommended bulwarks against potential economic downturns. Let's uncover these 2 dynamic assets, silver and gold. These precious metals have stood the test of time and proven their mettle in multiple financial crises. Why do these 2 shine brighter in times of economic upheaval? Well, these are tangible assets with inherent value. During financially turbulent times, central banks often resort to money printing, leading to increased inflation. The rising inflation can cause traditional paper currencies to lose their value. In contrast, the value of silver and gold generally tends to rise. Thus, these precious metals can offer a protective hedge against inflation and a potential dollar collapse. But that's not all. Rogers also advocates keeping an eye on commodities like rice and other agricultural products. Essential to human survival, these commodities often remain stable or even increase in value during inflationary periods, offering yet another layer of protection for your investments.
In my view, and
all of this money printing historically has led to higher prices for real goods. So in my view, we have a long way to go. The all-time high on silver is $50 an ounce. Now it's 23. So why can't silver go back to its all-time high? That's the way markets usually work. Eventually, things go back to where they were once upon a time. So I would suspect that we still have plenty of room to make money in commodities, especially agricultural commodities.
Investment strategies in property and bonds. Moving from the realm of precious metals and commodities, let's turn our attention to property and bonds. While some may view bonds with a skeptical eye, fearing a bubble about to burst, Rogers points to real estate as a potential haven in an inflationary storm. The reasoning behind this is that in an inflationary economy, costs rise, including rents. For property owners, this can translate into a consistent stream of income, offering a financial cushion against the buffets of inflation. Savvy investors like Carl Icahn have leveraged this strategy to accrue substantial profits during past economic downturns.
I'm actually making money at the moment, which surprises me, but I'm making money on my bond shorts. Maybe it's the end of the 32-year bull market. If it is, I'll make a lot of money in bonds.
Embracing the value investing philosophy. One philosophy in the investment world has withstood the test of time and turbulent markets: value investing. This is the philosophy endorsed by financial titans like Carl Icahn and Warren Buffett. At its core, value investing involves identifying and investing in assets others may overlook, especially during market downturns. Times of economic uncertainty often throw up temporary challenges for businesses, leading to a fall in their stock prices. This is where value investors see an opportunity to invest in these businesses at a bargain. By staying flexible and adapting quickly, they make the most of these situations and often reap significant returns when the market eventually recovers.
There's two kinds of items that people buy and think they're investing. One really is investing and the other isn't. If you buy something, a farm, an apartment house, or an interest in a business, and look to the asset itself to determine whether you've done something, what the farm produces, what the business earns, and so on. You look at the investment itself to deliver the return to you.
So as we bring this enlightening journey to a close, let's reflect on the key takeaways. Every nation's economic journey, punctuated by rises and declines, is an inherent part of global economic history. The key to successfully navigating these uncertain times lies in learning from the past and making informed investment decisions. Assets like silver, gold, commodities, and real estate have consistently demonstrated their potential to offer protection during inflationary periods and potential economic downturns. By incorporating these into your investment strategy, you stand a better chance of safeguarding and growing your wealth, even in the face of a weakening dollar.
If you want to protect yourself, that's one way I am protecting myself. I hope I'm getting it right. Agriculture is cheap and many commodities are still cheap. Now, copper is making all-time highs. That's because it looks as though the world is going to become electrical cars, trucks, and everything else. Well, it turns out that an electric car uses several times as much copper as a combustion engineering car. So there's going to be huge demand for some of these metals that we didn't have before.
Knowledge is indeed power. Armed with historical insights and astute investment strategies, you can confidently navigate these turbulent economic waters. So heed the wisdom of Jim Rogers, consider these assets, and fortify your financial future. Thank you for accompanying us on this intriguing journey into the world of finance and investments. If you found this information helpful, please like, subscribe, and hit that notification bell for more financial insights and wealth-building strategies. Remember, together, we can navigate the ever-evolving landscape of global finance. Until next time, stay informed and invest wisely.